All right, folks, welcome back. It is Monday, the 29th of May, 2023. Let's go ahead and get started with our broad market analysis. First thing I will tell you, it's going to be a short week, as you know, but we will be covering future charts as well towards the end of this video. So please stay tuned if you're a futures trader. First off, it is the 29th through the 2nd. And again, short week, just keep that in mind. As far as the earnings are concerned, you guys can see that as far as the ones I have underlined are the ones that I'm interested in: CrowdStrike, Salesforce, Okta, Chewy, BRP, Dollar General, Zscaler, Broadcom, Lululemon, Mongo, and Five Below. These are all names that I take some interest in. You may be interested in some others. Just take note of them. And as a reminder, folks, before we get started here, the 31st is my webinar here at Simpler Trading. I hope that you guys are coming out there and make sure you support. And again, it is free, so take the time to please come by and check us out on Wednesday night at 7 Central. Let's go ahead and go into here. This is our market watch. Remember, guys, these are just economic events that could happen in the market to create a little bit of volatility. But again, price is king. This is just a catalyst that moves price to our supply and demand zones. Take note of what's going on this week. A lot of Fed heads talking. Guys can see that again. We also have initial jobless claims here on Thursday. We have PMI. And then on Friday, U.S. employment report, and then once again, job openings, ADP employment, all these little things. I really don't put a lot of emphasis on them. As you guys know, I'm all about levels, identifying those levels in advance, and then executing off of those levels. And again, this is just a catalyst that moves price to those levels. Okay. All right, let's go ahead and move on. So next thing is going to be our neutral strategy from the previous week. I want to point out what happened during this time. We got a short trigger. If you went short, you did hit T1, T2, and T3. A matter of fact, where price actually came into and bulls showed up was right at the trendy edge. That worked out beautifully. Matter of fact, pushed from 410 to 420. And here, once we went over the cloud, you can see we had this explosion for price, and it stalled right at our top level of 420.46, which is kind of cool. Over here on the QQQ, same thing, except for they did kind of bid up over the line. So if you went long there, you got like $1, but then probably got stopped out. Did get a short trigger here. It did hit T1. Bulls came in at T1, 330 all the way into 348. We did get the buy trigger about 338.09 once again. 341 hit, 345, and 348. Absolutely beautiful. Let's go ahead and move over here into this week's. Just take a snapshot. These are your levels for this week. Remember, all levels to the upside are resistance and all levels to the downside are support. As far as my sentiment goes on the SPY and Qs, SPY feels a little, they both, from a 4 hour perspective, seem a little extended, just like last week. So any kind of pullback is a buying opportunity into these lower levels once things match up. There are some things showing me on higher time frames that we could be coming into a stalling market, and maybe a little bit of consolidation. It would be a good excuse to me for a 4 day week for us to just kind of pop off of momentum after the Memorial Day, and then kind of just digest for the rest of the week. But I've been saying that for a couple days, a couple weeks, sorry. And lo and behold, it has been a buying opportunity and we've ripped quite a bit. It's been a great week. And as I tweeted out just not too long ago, it was one of my best weeks. And I have to stay humble. I'm still cautious, and there's some things in here that I think we should stay cautious about. My focus is to just stay focused on fewer names this week and try not to be all over the place, because sometimes when it gets super bullish, it's easy for you to be in a lot of positions. But really, I would much rather, after such a good week, and I would much rather tone it down and just be concentrated on a few names with bigger allocation. All right, let's go ahead and move on. Going into here with the bigger picture, this is SPY. Our update for 529, just as price continues to push towards the 23.6 or that 424 level. Important to find demand on lower time frames. As you know, on the ES futures, I have charts that range any from the weekly to the 4 hour. And every day I'll be coaching you, acting as your lifeguard to keep you out of those bad conditions and look for the trend and so forth. Okay. Notice that what I did here, for anyone that might be new, is basically I took Fibonacci's from that rally into that top. This is where we found the 23 and the 38%. And I call this the bull channel. As long as price can hang in that rally formation from here to here, or that range in between the 23 and 38, is extremely bullish. That's what keeps me on the right side of the trade. Notice that we went from white to green, so momentum change. So white to green candles, okay, and the cloud is holding. So as long as the monthly cloud is holding, I continue to think that we're headed up towards 424. Timing is a variable, and again, if we pull back, go back to those neutral strategies and look for those levels. Next, I'm going to be looking at the Qs here. Far as the Qs go, price hit the 23.6 and looks like a possible attempt towards the quarterly supply zone. Now that's a long ways away, folks. That's at 362, and current price you could see here was just bidding right above the 340s, around 346, 347. Now going into, and as far as the bigger chart is concerned, as long as the monthly continues to stay above 346.87, we could see this 362 level. It has approached a little bit of a supply inside and down formation, but the middle candle is bullish, so it's just something to note. This is not a bearish candle here. So again, if we could stay above this level, we could continue to push in here. Once again, though, this is the big picture. Don't get confused. It is a monthly candle. My focus is when the monthly candle closes, where does it close? That's why we use the neutral strategy and we coach every morning, because every day creates some sort of new roadmap, and we just got to make sure we're on the right side. Moving on, this is the dollar, or the DXY. It came into the inside and up formation. It pushed up like it was supposed to, and now it's above the cloud. It did get past the first resistance spot of 103.887. If it can hold above here, expect prices to move into 105.77. It is still in what we call the bearish channel. As long as it's in the bearish channel, I'm not too concerned until price can push above this green level. If it pushes above there, I could expect prices to move into this inside and down formation. Moving on, let's get into futures now. ES futures, you can see this weekly chart has been here for months. Matter of fact, the only thing that's changed is we removed a couple lines, but we're still in the supply zone. Now, we did get above 42.20, which I thought was a really big deal for the bulls. However, can they hold it? And if they can hold it, that's a great thing. But right now, we're still in supply, and once we get over the topping wicks and actually create a base over this, I still say we should be cautious. Again, it doesn't mean that we can't go long, folks. It just means that I'm thinking cautious. Okay? Notice that the big support really worked last week. It's absolutely worked over and over, and we've had this level on the chart for months. That's what makes us different from most services. We're able to identify these levels and give you those levels way in advance. As far as the weekly is concerned, as long as we could stay above the support of 41.77, things look pretty good. Matter of fact, as long as we stay above the cloud, things look good, and we could see upwards towards 43.16. Let's move on to the smaller. My triggers have changed. I change these every week. So your long triggers are now 42.08 and 41.60. Very important to note, if you're new, we use smaller time frames when we get to these levels. Then we look at the histogram on the TTM Squeeze Pro. You don't necessarily have to look at it just in case you don't have the TTM Squeeze, but if you want to be careful when we get down here, we always go from a 1 to 5 minute chart just to see if we're actually triggering off of those levels. For example, last week our trigger longs worked really, really well, but we blew past the short triggers. We would have not gone short because there was nothing telling us to go short. So please don't get confused here. These are just reference levels at areas of supply in Fibonacci's, okay? We can blow through these. It's not a big deal. Just like we can blow through the downside long triggers. Most of the time they work, but please be sure that you understand our process. Moving on over here, this is your ES futures. This is a 1 hour chart, and basically what I have here, folks, is demand, support, and honestly the support should work pretty well. And up here, it is a red box. It's saying supply. There's a little bit of supply here, but it's not too strong. So price could bid through this very easily. But again, this is my blueprint using a 1 hour chart. And once again, these are in the room drive under images. Okay, so in the room drive under images. NASDAQ weekly, here we go. This is our blueprint for this week. You can see it's been very bullish. That cloud keeps holding. We keep getting buy signals. Looks a little extended. It is there's quite a bit of divergence between the cloud and price. And I would be paying attention if for some reason this weekly candle goes inside of last week's candle. Be cautious there as it could just be a consolidation week. Going into the daily, same thing. We have triggers long, we have resistance, and we have a short trigger. If you have any questions, please reach out to me. We'll be going over this primarily on a daily basis. Over here, this is our 4-hour chart on the NAS. You can see we have the cloud here. That cloud is support until proven otherwise. If for some reason we break down below the cloud, I would expect us to move potentially into support. Once again, we have this really big imbalance in the market. And just like any other imbalance, there are orders to be filled. Timing is the variable. I think this looks like a great blueprint going into this week. Over here, this is your fear and greed. We're at greed, which is number 68. It's primarily saying that the participants in the market are pretty much on the long side. Just something to take note of. Over here on the skew, this is your hedge funds and basically what they're looking at. And I've always loved the skew. I continue to use it, and I cannot ignore the fact that we are up here towards 146. This is a really high level. What I did was I went over to the monthly, okay, and I found this level up here around 154 and some change. If for some reason the market continues to bid to the upside and we get towards 154, I will be buying puts 30 to 90 days out. And again, I'll coach you when we get there. Basically, when the skew is rising to the top, it's time to be concerned. What you'll see here is that most of the ES, the NASDAQ, the Dow, things like that will be coming into their supply zones or resistance. The greed index will be extremely greedy. And then the skew is showing that the max participants are really over here on the long side and a little complacent. It might be time for some sort of pullback. Not a crash, just a pullback. All right. So again, timing is the variable, and that's why I say 30 to 90 days out. But again, we'll talk about it when we get there. Overall, my sentiment this week, folks, is just like any other week. The more that I stay in the market, the better I get, and the better you get, I start to realize and have realized that price is king. We have an amazing strategy that I'm very happy to share with you guys. And really, it's just about respecting those levels. Stay patient, watch the process, and then the profits will come. We just need to stay patient. Let's try our hardest not to buy into many other people's opinions, try to stay off social media, and just watch the charts. Try to stay away from talking heads. Try to stay away from economic podcasts. Those type of things, in my opinion, just create too much noise in your head. And when it's time to execute the levels, you find yourself hesitating. I do not want you to hesitate. Let's have a great week. I can't wait to be with you guys. And as a reminder, I can't wait to see you Wednesday for our webinar. See you soon.